Hi, I'm Lucas Johnson.
And I'm Catherine Oakes.
And this is 2 Cents and Nonsense.
A place where we give our 2 cents on mortgage trends and money habits.
And share hot takes on hot topics. All right, episode 4. I'll just say this. This is my favorite time of year. It's finally like warm enough to where you're not having like that cold February and March and you're sitting into April. It warms up, like it starts out cold and then it warms up.
You're not a pumpkin spice latte fall
I am not.
fanatic?
No, everybody loves fall, but I love spring because you got the NHL playoffs coming up. NBA playoffs. We just got done with
You
March
love spring
Madness.
because of sports.
Baseball's happening. Well, there's a point right when the NBA season dies off where you just have baseball for the full summer and it's kind of boring. And I'm not like a big baseball fan. So this little like window from February to like April and that's when you have, I mean, the NFL just ended, you got and the March Madness just ended, and now you're going into the NBA season and you have the NHL playoffs. And so it's just like boom, 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 boom.
So this isn't going to be really interesting because I agree with you. Not for the sports reasons, but spring is my favorite.
Spring is your favorite?
Spring is my favorite. Well, I feel like the whole year.
Is it because everybody loves fall and you got to be different than everybody?
Yes, it is.
that sounds fair.
Accurate.
Yeah.
No, honestly, I
do
love
like fall, though.
spring and I love fall, but fall is kind of a closing.
Mm-hmm.
Spring is kind of a beginning. And so I kind of like that feeling of the whole year still feels like it lies ahead of you in many ways.
It used to be summer, but then I got old and now I don't have a free summer. I still work every day. So when you're a kid, I feel like summer's the best.
My favorite season is free time. That's my favorite season.
That's why like anybody that you'd ask, what's your favorite subject? And if they don't say recess, I'm like, this is weird.
You know what I've been doing in my free time?
What have you been doing in your free time?
Community theater.
Community theater? Where at?
At Jonesboro Repertory Theater.
And what are you doing?
We are preparing for The Lion, the Witch, and the Wardrobe. And when this...
Are you the witch?
When this podcast episode releases...
Are you the witch?
We're going to...
Are you the villain?
Am I the villain?
Are you the villain?
When this episode releases, it will be opening night for Lion, Witch, and the Wardrobe. I am not the witch. I would have been honored by that role because it's a very impressive role. And I love who's playing it. She's a sweetheart. Spoiler.
I spark-noted that book back in high school when we were supposed to read it to get AR points. Spark-noted the snot out of it.
I play Mrs. Beaver.
Okay.
He's a super fun character.
Uh-huh.
Yeah, it's not too far out of my wheelhouse. It would be fun to play characters moving forward that require me to become more different than I naturally am. But Mrs. Beaver has been really fun.
I don't know how you have the willpower to do something, because I know based on like schedule every day, you're like, I have rehearsals. How do you do that and then not get paid for it and then continue to want to do that? Because I even know like when you have to actually do the play, it's like 3 times a day for 7 or 8 hours. I'm like, I don't know if I could enjoy anything that much and not get, and to have that be that time consuming and not get paid for it.
So last night, our call time, which is the time where you have to be at the theater as a member of the cast, was 6:30, and I have learned that I actually have to be there by 5:30 to have enough time to complete my stage makeup.
So 5:30, and when'd you get out of there?
And then we start the run at 7:30. Last night, I got home around 11.
Yeah, dude.
So it's
like
funny,
that's
like,
wild for a hobby. Like you're not getting paid.
Here's this, and I'll put it in our shared terms.
Okay.
It's about return on investment. I think you're coming to see the show like the second weekend.
Really?
So it'll be.
I'll give you a shout out. Middle of the thing, I'll go, Miss Beaver.
There you go.
Ruin everything.
Okay, let's talk about some 2 cents.
2 cents and nonsense. What's today's topic?
Today we're going to talk about what is an interest rate.
They make the world go round. The economy.
Does it really?
It does. Now that we are fiat money system, like the actual economy is built on fiat money. It's printed money. This is not real life. It used to be on gold, and now.
What did you just say?
So it used to be the gold standard, and now it's fiat currency. So money is printed. So it's basically backed by the government rather than precious metals like it used to be. And so now the cost of
there's
borrowing.
some people holding out.
Yeah, dude.
Holding out for precious metals.
Yeah, shout out. We have a sponsor. It's Gold Birch Bank.
No, we do not.
I love all those commercials that they always do, and they're like, make sure you put a little bit of your thing in precious metals.
Diversification.
No, But so everything's backed by the government.
Watch
and the
us
government,
have to eat our words a year from now and be like, look how much have you invested in precious metals.
Only Pokemon cards. The alternative investments is Pokemon cards.
Real estate and Pokemon cards.
That's it. 100%. Well, so yeah, anyways. So interest is just the cost of borrowing money. So now that basically sets, and the government sets the rate on what that is. And so based off of that, whether interest rates are high or low, it dictates your access to capital, which then fuels how much you can reinvest in businesses. So when interest rates are really low, usually it's a growth time because everyone's borrowing as much as they can to reinvest. And so with housing, I guess it was 3 years ago now. It feels like everything's flown by since COVID. They got all the way down to like 2.8, I think is where they bottomed out on mortgages. And so everybody just went wild.
It was like
2.6?
At 2.4.
No, and I don't think it got that low. On a 30-year?
Yeah.
That's crazy. Yeah,
I'm recalling to mind certain specific mortgages.
Yeah, so you're locking in your ability to borrow money at 2.4% for 30 years, and inflation has typically been 3%
right there.
Yeah, and then it's been 9% the last couple. So they say, I think it's more than that, but they said it's been 9%. So you're basically making money if you just borrow money. So that's why it's kind of the economy is flipped on its head, where saving doesn't necessarily make a whole bunch of sense. If they're going to let you borrow money and then keep printing it, you might as well invest it somewhere. That's how they want the circulation of money to be quicker and quicker and quicker, because that's how they feel like the economy grows.
And then the government motivation on interest rates, we could get into this, but let's just say were that motivation to be truly pure, that goal would be to help encourage a healthy economy, correct?
And that's why they say to encourage a healthy economy, they want inflation to be between 2 and 3%. The reason, the thought process behind that I don't necessarily agree with, is that if because things get cheaper over time. So if you think that something's going to be cheaper in the future, like if you think about a smartphone or TVs, as technology improves, stuff gets cheaper.
TVs, big time, man.
Yeah. So if stuff gets cheaper, what they're thinking is that people will hold on to their money and they'll be less likely to spend it because they'll think in a year it's going to be better. So that's the thought process of wanting to have inflation happen, so that you're comfortable separating yourself with your cash, because as cash circulates in the economy, it grows and multiplies.
The idea that it's going to kind of level out.
Yeah.
Hold on to my cash and risk something being cheaper 2 years from now, but also inflation is consistently happening. So that same item has a chance of being cheaper and a chance of being more expensive.
Yeah, which is why they naturally want the inflation. They think it's healthy. I don't necessarily agree. I kind of like the idea. I think it just steals from middle class and poor people, because the rich people have all the assets. So when you inflate the currency, their assets go way up. But your average person that saves money and takes that time, like now they're becoming poor because of the fact that their money is worth less. So you're de-incentivized to save and be responsible with your cash. Instead, it's like, let's just blow it on whatever I can spend money on, because it's going to be worth.
If I'm behind, it's
going to cost more in the
start.
future by like a lot. Yeah, so I think that's kind of a way.
Now,
that's not great.
What would drive interest rates higher? What would drive interest rates lower? What has caused those trends over history?
The federal funds rate is like, we follow the market. So we follow the 10-year treasury bill. So when it moves, we move, is mortgage-backed security. So when it goes up, we go up, and when it goes down, we go down. And it's basically every time that they release market data, so every week there might be 3 or 4 numbers in economic indicators. Yeah, the government releases it. As long as it hits expectations, most of the time it's not going to move. But if
expectations of who?
You'll have economists that say, hey, this number is going to come in at this, right? Inflation is going to be 0.1% month over. So as long as the expectations that these economists, like predictors, come out with, analysts come out with, as long as it's about like where it's at, the market doesn't move violently. But then we had one even a couple months ago where the number came out and it was like spending was way out from where expectations were. The jobs that came in, the job numbers was way out of line. And when that happens, then you see like, oh no, is something happening? And then everybody freaks out. The market panics, it shifts, and then you have that big increase.
This is kind of a bunny trail, but weren't the Q4 reports of last year not quite?
It's all, in my opinion, I think it's a lot.
Very
it's
controlled.
Fugazi, yeah, because they'll come out with a number and then it gets like changed, and they're like, oh wait, it really wasn't this number, it's this number.
Right, like corrections to the numbers being made in the current quarter that should have been attributed to the previous quarter, and yeah.
So that
I paid
that
attention
affects
to
the
that
market.
this time.
But rates right now are like right in the low 6s. They say in May like May 10th, they're going to drop. But I don't, it's hard for me because the economists can be wrong all the time and still keep their job. And a lot of times they pat themselves on the back when they hit the numbers, and then they are like, well, we didn't expect this when it doesn't hit. But I don't necessarily believe that they're going to drop that quickly. I think what's going to end up happening is probably it's going to be like a slow burn. They'll slowly go down over time. And I think it's going to be more compressed because I remember last year they were like, oh, by March it'll be 4. And then we had that spike and bam, and it just takes one bad number. So trying to guess what they're going to be is, I think it's,
and I'm very,
as much as anybody. They said inflation would be 2%. And it was like 9 based on their number, and really 16 if you.
I'm very driven by optimism, and when it comes to rates, this is something that I've grown very comfortable in having conversations with borrowers and people asking about buying a house. I'm like, I could predict, but who am I? Why would you take my word to the bank?
Yeah.
Just as much as if you tried to predict it, I wouldn't take your word to the bank.
No, yeah.
So
they always say, and then like the expert, Jim Cramer's wrong about everything. They always there's a bunch of people online that pick stocks against what he has to say, and they're
wow.
So like it's one of those things. Warren Buffett talks about this all the time. Like you picking stocks, it's very challenging to do that at the highest levels. So. Someone's opinion's not always going to be right. You just got to do. So that's why I'm always like, in this individual instance, do you think that this payment that you're going to have to pay is something that you can afford? And then if it goes, because let's say it never goes down and it goes back up to 16% or something crazy, which it never would. But let's say it did. Would you be comfortable with the 30-year fixed rate that you have now?
So let's talk about that. Let me phrase the question this way. So we've just established that interest rates are here now. Mm-hmm. And then tomorrow they could be here or here, being higher or lower.
Correct.
And with that unpredictability, people who are on the cusp of getting another mortgage or buying their first home, how much should they be letting interest rates and the trends of interest rates impact their decision to buy a home or not?
I think it's definitely a factor to consider. Is it the most important factor? I probably would say no, because let's say rates do drop dramatically, you can refinance. When rates go down, usually the value of the house goes up because the ability to borrow money, there's a lot more people. The demand the amount of people that can afford housing goes up, which basically means that you have more people chasing after less houses, which means prices go up. So that's pretty much how that would work out. So if it drops, then you refinance, and then you're on a 30-year fixed rate term, and you still owe the same amount of money for the most part. A little bit of closing costs would get rolled in, and then if it goes the other way, you're as long as you're fixed 30-year rate, and there's no balloon payment or some kind of crazy terms, you're going to be fine as well, as long as you're comfortable with your payment as it stands. Because the only thing that's going to move typically is taxes might go up a little bit, not in Tennessee, baby, and then homeowners insurance that could go up if there's like a disaster or something. But it's been pretty flat. So I don't always say that it's the most important. Now, obviously, when you're picking between mortgage companies, it's going to be important because you want to get the lowest interest rate possible.
Right.
But a lot of it's due to payment. Most of the time, if I think it was like if interest rates go up 1%, typically you've seen a drop of 15% in the price of stuff. But right now, there's been so much inflation that we're not, and everybody's moving here to Tennessee.
We're not leveled out in that
We're
way.
not leveled out, and because there's so much demand of people moving here from other states, we are seeing prices drop in other areas, especially populated cities, as people move because they have the ability to work remotely. Tennessee is no state income tax, so as you have the influx of people, even with the increases in prices, people are still paying them.
Yeah.
So as growth of population happens as well, the prices are going to go up, and nobody wants to sell their house because they're locked in at a 2.875 interest rate. I would never sell my house, so you run into that issue where there's just not enough supply for the people that are trying to buy.
I'll share this as an example. I saw a random house online the other day that I was like, oh, this looks like a really cool house. Would I even be interested in going to see this house? I don't know. I don't have to buy another home, but I'm open to buying another home. It's not my plan to be in the current home for too many more years. And I asked you to quote it for me. So you quoted it for me, and
You cried.
Yeah, look, I cannot even remember what interest rate you quoted to me because all I looked at was the payment.
Yeah.
Which is not an inappropriate thing to fixate on. And you're totally right about the option to refinance in the future. obviously being in the mortgage industry with you, I'm very aware of the option to refinance,
Yeah.
before your 30 terms are up, and that can be a good strategy. However, it was very important that I do what we say to do, which is to look at that payment and say, if I were married to this payment for 30 years, if interest rates were happen to just go up, 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 up for the next 30 years, would I have a happy marriage with that monthly payment?
Yeah.
And the answer is no.
No, it's not that fun.
I would have
The
kicked that
extra
payment to the curb.
the extra stress is not, I don't think, worth it a lot of the time.
And we have to kind of file that under the category of just because you can doesn't mean you should.
100%.
But that's another podcast episode.
Yeah, just because you can doesn't mean you should.
So, question for you. People in the general population may have heard the phrase buy down points.
Yeah.
Buy points, buy down your rate sort of thing. So let's talk about that buying points. What is a point? How do I buy that down? What does that mean for me?
So a point is a percentage of the loan amount. So if you're borrowing, so like let's say $200,000 loan, 1% of that is $2,000. That would be 1 point. That would be added. So it's dollar amount that would be added into your closing costs, and you can use that to pay the interest rate down to make it less. So usually,
you quote me for a 6% interest rate.
yeah. So let's say if I go, you're at 6.25 interest rate. We could get you 6.125, but it'll cost you $700 or $800. We can get you 6%. It'll cost you $1,200. So you can pay extra money in your closing costs to lower your interest rate over time. And it's simple math, to see what the difference in payment and how long it would take for you to recover that amount of money. Right now, as rates are trending down, it doesn't really make sense to try to buy points because eventually you're going to refinance anyways. So you're kind of throwing money that's never going to be recovered. But in an environment,
if your equity, like if you hold on to it and refinance after a point when your equity has risen, that could come back to you.
But it takes a while for you to gain, like the difference in, it may be $10, $12 to pay it down just a little bit. And then $12, $600 is what it costs. Divide that out. That's how many months as far as a payment goes for you to repay that. Does it really make sense when interest rates are dropping and you're going to refinance? Probably not. Now, the other way, when it was really low and then they started to creep up, probably does make sense to buy a few points so that you're locked into that 30. So when rates were at 3 and you're like, wow, it's probably not going to happen, I might want to buy it down as much as I possibly can.
Yeah.
And then that way I'm locked into that 30-year forever and I'm never going to refinance again. I'm going to make that money up later on down the road.
I also think the term is a factor in that as well. Not so much the term that you actually get from the mortgage company, but the term that you foresee yourself living in that home. So let's just assume that refinances are off the table for a moment and somebody's just making this decision apart from the possibility of refinancing. If I'm purchasing a home and I'm like, they're going to bury me in this backyard.
Yeah.
I am never leaving this home. This is my dream home. I will never even be tempted to move anywhere else. That might be a great time to buy points down because you view yourself as very locked into that particular home, therefore that particular mortgage. If you're in a home, like I'm currently in a home, where I'm like, it was always our plan to really only be here like maybe 5 years, 5 to 7 years, whatever. I don't know that that's a great time to buy points because I already see myself parting with that house.
Yeah, there's many the factors of whether or not you're going to keep. It's basically how long are you going to keep the mortgage and does it mathematically make sense?
Right.
And I know most people think that they're going to keep it 30 years, but I think the statistics are 5 to 7 years is how long the average mortgage is.
Awesome.
That's why they
I'm
front
aiming
load
for the average.
That's why they front load interest. So that's how they're able to make money off of mortgages.
Explain that front load interest.
So when you look at your amortization schedule, which is basically just tells you a breakdown of, okay, here's your payment, how much of it is going to principal, how much is going to interest.
I might be one of the few crazy people who actually likes to look at that.
Yeah, I don't. But the bulk of the money is going towards interest at the beginning. And then as you pay down principal, it starts to sway the other way to where you're then starting to pay more interest on the back end of the mortgage.
So I have a $700 payment.
And let's say 150 of that goes to principal and the rest goes to interest on the first end of the payment.
Yeah.
And then towards the last
as you're
few
making
payments.
your final payments.
As the last few payments, it'd be the other way, 700, and then it switches. And you can see that from payment 1 to 360.
Yeah.
So that's what the difference is.
Let's talk about something cultural or generational for a second. I feel like I'm seeing from first-time home buyers, and I don't know where the disconnect that is causing this, but like a pretty strong grumpiness, and I don't want to say it's unfounded, but a grumpiness towards why should I have to spend money to borrow money? Is that a fair sentiment? Are you seeing that here and there?
What do you mean by that? I'm not really
why do I even have to pay an interest rate? Why does the government just to get to name the interest rate? Like, why don't I, like, Why doesn't
Because
it matter
think
how
about it
great
this
of a
way.
person I am?
If I was going to give you, let's say you wanted to get a mortgage and I was just doing it as like a hard money lender and I
Yeah.
was going to give you the money. Well, if I'm going to give you $100,000 for like, there's a cost associated with that, and
Right.
I want to get a return on my money, or else why would I give it to you and not give it to somebody else
Yeah.
or do the stock market at 10%?
It does help to have that lender perspective of it's not always just a purely selfish thought to say, what is in this for me? It's
Yeah.
appropriate from an economical standpoint and a business standpoint for the lender who's lending hundreds of thousands of dollars
That there's
to
going to be
say,
a cost that's
what is my
associated with that.
return? Because it's a risk.
Yeah, and if
It's
you
a
want
risk.
your interest rate to be zero, that's fine. You just have to save it up,
Yeah.
and then you don't actually get
Save it
that.
up, buy cash,
Yeah,
no interest.
So save up to. That's why my beef with Ramsey. I love him as far
Whoa,
as
slow down. Slow
I
down.
love him as far as like how to deal with credit card debt and things like that. But on a 30-year fixed rate, if I'm paying, I'd rather. I know he likes the 15-year, which I think is not bad advice to do that.
Right.
If you can,
When you can.
but when rates are 2.875, you might, or 3%, like they were, you might as well. And if inflation is ridiculously high and is going to continue to be high, you borrowing that versus let me save up $300,000. By the time I was able to save up $300,000, if I have the average salary in America, the amount of equity or that I could have accrued in my house plus appreciation, I'm making an unwise financial decision long term mathematically. Now I get that he a lot of the times is arguing from a place of like it's just gives you the peace of mind to not have the payment.
I would say a good summary of his ideology is to just be as far away from risk as possible, which is a really important security thing.
No risk it, no biscuit.
Well, I think it's a fair perspective for him to have, considering his personal story of extreme risk, therefore extreme loss when he had a wife and young kids.
But also he was taking out loans that had like a 6-month term because they were flipper loans.
Yeah.
And then he was getting screwed with balloon payments. But if
you're
you're on a 30-year,
he thought.
Yeah, but if you're on a 30-year fix, the risk level is a lot less, or even a 15-year fix, which I think that's why he now is like, it makes sense.
I think you and I both land. There's a place for risk. There's a place for security. And you just have to wisely weigh those as 100%. You make your decisions and your investments.
And you should be more, I feel like you should be more risky the less that you have, and the more that you have, you should be less risky.
Yeah.
Because I mean, at the end of the day, like when you're young and you make risky, you can always come back from that. When you're old and you got all that money in retirement, probably don't want to throw that into like a tech stock that could drop like a hat, because then you've already like the risk reward factor is not there.
Right.
But like a lot of people didn't have anything and then they sold what they had to buy Bitcoin and then it went to the moon. It's like, well, they didn't have anything to begin with, so the risk there of it going up was probably worth it. Worst case scenario, they have to start back over, but they didn't have that much to begin with.
Right.
So it's all going to be dependent on that, and you got to think. And that's why I know it's not super black and white, but a lot of times when you ask, whatever. When you ask an accountant, they always be like, "Well, it depends," and you're like, "Yeah, I mean, it does depend."
What a frustrating but accurate answer.
Yeah,
but
I don't like to.
I will say that is why you and I personally and professionally love to have one-on-one financial conversations with people. Because it is individual, and every person who comes to you, to us, to apply for a mortgage, we like to hear their personal motivations, their personal stories.
Oh yeah, a lot of it is psychology.
Yeah.
Like if it makes you feel better to not have that payment, then pay the payment off and don't have the extra stress in your life.
Yeah.
Because if you have all that extra stress, you may not be able to make as much money. It affects you.
Might not live as long.
Yeah, all that different things. Whereas if you don't have it, mathematically, it makes sense.
Oh, Luke, that sounds so gray.
No, it doesn't. It sounds like if this, then this.
No, it's if this, then this, if this, then this, if this, then this, then this, then this.
But that's still not gray.
Yes.
No, it's not.
Every branch is just gets grayer.
Yeah.
Just gets grayer. Okay. One more 2-cent thing about interest rates and points.
Yes.
Which is there's like a hot product out there right now. It was hotter a little bit a few months ago. And it's called the buy down program. People have probably most commonly heard it as a 2-1 buy down.
2-1 buy down is the one that makes the most sense and is the most useful.
So what does that mean? Because literally that's a mortgage product where I know it's technically kind of a conventional based product, but whereas I might go get a conventional loan or an FHA loan or a VA loan, instead I would be getting a product called the 2-1 buy down.
Yeah, so all it is prepaying part of your payment to get your interest rate down the first year. So the 2-1 buy down means for 2 years your interest rate's going to be deducted by a percent. So if the interest rate today is 6%, that first year the interest rate would be 4%, the next year the interest rate would be 5%, and then that third year it would be 6%, and on it would be 6%. So you're getting a discount on the front end. But the thing is unless it's being paid by the seller, it doesn't make sense to pay your own buy down.
Because then I'm paying my own
Because then you're paying your own discount. So what will happen is they will take what that difference in payment would be from 4% and 6%. Let's say it's $200. So it's $200 a month times 12 months. They collect that amount, and then let's say it's $100 a month for 12 months for the second year. They take all that amount of money and they put it in an escrow account. They just put it in an account, and then when you make your payment, they use that money to shovel it out. And then if you decide to refinance, you could take that money and use it to refinance. So it's just kind of money that's been set aside. The pros to it is that if you're buying, like, if you're a builder and you want to use and you're doing new construction, there's not as much demand because people are like, oh, my interest rate 6%. It's crazy. I don't want to spend that. Well, it's a way to get people to come up because they're like, oh, well, I'm going to refinance in the first 2 years. It's going to be extra low. Mm-hmm. So you might use that as an incentive to get people to purchase as a seller so that you don't have to come down on price. Yeah. So there's definitely pros and cons to it.
I've also talked to real estate agents from a listing perspective that it could benefit them to just go ahead and publicly advertise. If you know your seller is willing to give up, this much of a seller credit towards whatever buyer comes along, that's not something terrible to go ahead and advertise in advance. Like, hey, come check out my house on 123 Main Street. The seller will buy down your interest rate.
Yeah, no, 100%. They'll buy it down for a little bit. And then you see that payment versus the other payment, and you're like, oh, maybe I could do this. But I always say, like with my buyers, when they're going to do the program, I'm like, okay, but look at the third year and make sure that it's 6% you feel comfortable. Because what if rates don't go down? You're making an assumption, but let's do worst case scenario in our head. Do you feel comfortable with this payment if you had to? Yeah. And most of the time they go, yeah, I can do it. If they're like, well, we'll refinance with them, I'm like, but don't get into something that, because that's what happened in 2008. Everybody was doing adjustable rate mortgages. And then when it shifted and interest rates started going up and then their payment went up hundreds of dollars and they couldn't afford it, then they had to foreclose. And so that was what caused the problem. That's why I like the 30-year fix, because it's fixed. It's not going to go.
Well, in theory, I think this product was meant to give some temporary revival to the mortgage industry.
I think so. It was falling off a cliff, and if you're a builder and builders,
interest rate climate. However, in execution, it's not been as popular as people thought it would be.
None of the new programs really ever are.
No, it's the shiny thing. But a lot of that has been because you are doing your due diligence, sitting down with the buyer and reminding them, are you comfortable with that 6% interest rate? And it comes down to payment again. We circled right back to that. Are you comfortable with that payment? Another thing is I find myself having conversations with buyers and saying, okay, I see on your real estate contract that the seller is willing to give you a credit of $3,000, whatever, let's just say $3,000 toward your interest rate. Now, a seller credit is a seller credit. Is that where you want that seller credit applied? Because it can be applied to pay down your interest rate. It can be applied to pay some of your closing costs.
Yeah, well, at 3%, at $3,000, it's really paying down your closing costs.
Right. Like, what is more valuable to you as a buyer? Do you want to keep your cash and not have to bring as much for closing costs? Or is that interest rate buy down more valuable to you? Yep. And a lot of the times when I'm having that conversation with them, they're like, oh, they'll just pay my closing costs and I get to keep some of my cash?
I'll take that route.
Yeah.
9 times out of 10, yeah. Yeah. It's always better. That's what I would prefer. Keep your cash. Yeah. Then you at least have options. Yeah. If you can. Especially since it's only like every $5,000, like a $25 difference in payment. So it's like, is that really worth, the cost of one meal? Or would I rather have my $5,000? I'd rather have my $5,000. Yeah. So if I can get away with it. But yeah, I think and as far as interest rates are trending, they are going down. I think lower, at least I've been seeing that, but hopefully there's no spike that changes it. But market's still roaring, at least in our area, so thankful for that. Well, but let's get to some nonsense. Okay. We've revealed all of our thoughts on interest rates. Now it is time to reveal your most embarrassing moment. See, I didn't want to do that. It's funny. So, like with embarrassing moments, I think the most embarrassing moments are the ones where you'll have the memory come back into your head, and then you're just like, oh, and I'm making So. Oh, really? I think maybe I've suppressed those too deeply to even recognize them as a most embarrassing moment. Really? I don't know. Maybe I just want life to be pretty. So if somebody asks me about my embarrassing moment, like I've picked one. I can feel when I think of it, my blood pressure just rise.
Are you embarrassed easily?
Depends. Not, I wouldn't say necessarily like super easy. Especially now, I feel like it's gotten easier over. I mean, as you get older, you become less and less.
Embarrassed more easily than me.
You think so?
Yeah, but I don't like. I have told you this before.
How about this? I'm allergic to awkwardness. That's what gets me.
That's called
so like if you go up and do a small talk conversation and everybody has this where they go up there and you're like, man, I need to say something, but I don't know what to say. I don't really know this person that well. They're not like super close to me where I can go up and say something like I normally do, the people that are my friends. So then you're like trying to think of things to say, and then you're shaking their hand and they answer in one word, and then you're sitting there and it's just like super dead. That, like when you watch The Office and then you're just like sitting in the cringe and the awkwardness, that I'm allergic to. When people embarrass themselves, I have a trouble looking at it. I'm just like, oh no.
Oh, you're so compassionate about it.
It's my compassionate side. So I am allergic in that way, where I just like, I don't want to see people embarrass themselves.
I think I hate the emotion of embarrassment so strongly that I've just resolved to not be as embarrassed as easily. And to be as compassionate towards myself as I would be other people. Mm-hmm. So if I saw somebody encountering an embarrassing moment, I would be there alongside them to just be like, no, it's okay. Move on. You're fine. It's okay. It's not that big of a deal. Just move on. And to just move on.
Maybe you're just more suave than me. When I see the train wreck, I'm like, I don't know how to fix this train wreck. I just hope it stops. The most embarrassing moment it was, oh my gosh, it was horrible.
I'm ready.
So we're doing a church conference and a bunch of people are in town. So maybe
a bunch of people.
So of course, like,
was I here for this embarrassing?
I don't know if you were.
I was.
You were there. Yeah, it was a train wreck. So there's like, how many people did you say there were? About 500? 400? There had to be at least. It felt like a million.
400. I'm referencing Deanna, who's here.
So yeah, maybe okay. Let's just say
you said 400.
Let's just say 400. So there's 400 people, a bunch of churches from all over. All of our network is there, and somebody bowed out, or they didn't have enough people to do this like reading. So
yeah, I would call it like a spoken
skit.
word.
It was
presentation.
A spoken word skit, which I hate being extra serious, anyways, as it stands. But they're feeding you lines. There's like 6 of us on stage, and they put me in the middle. And I don't know why they put me in the middle, but I did not unaware.
They're not feeding you lines. They gave you something to ideally memorize.
Yes, it's a script, and it's like one word. So like, dude on the end would say a line, and then next person would say a line, and next person would say a line, and then it would get to you.
Yeah. And a spotlight was literally alternating between the.
Oh, it's horrible. They're taking a spotlight and they're going like this, and then they'd say their line, and then they would go like this, and it's like dark everywhere else. The lights have all come down in the church, so it's like supposed to be real serious.
The person who's
it's supposed to be real, and I have practiced like for a day, and it was so horrible. I'd practice for a day. I was nailing it every single time. Never missed any of my lines. It was so good. I think that's why they put me in the middle. And so I'm like, I'm nailing this in practice. People are forgetting their lines all over the place. And then we go up there, and this is why you should always practice.
Oh, in practice?
Everybody's forgetting everything. And I'm still nailing it. So then I'm like, man, that would be so embarrassing if I forgot my freaking lines when I'm doing this. So I'm like, Kara, I tell my wife, I go, Kara, can you sit right there? And if you see me struggling, like, just give me the first word. Lip say the first word to me so I can make sure that I'm on point. So then they get to me with the spotlight, and it hits me. I nail the first line, and I'm like, okay, I got this. I nail the second line, and there's about 10 lines. Third line comes up. Dude before me freaking improvised his line to where it was like nowhere near. So I'm like, that's not the line.
A little thrown off by the cue.
And I don't remember, because I was, I guess, memorizing it based on the line that was done previous to me. So I have nothing to say. And rather than me being smart and catching myself and saying something just like random or like deep, or try to say something where it sounds good, I just sit there.
Start verbatim quoting scripture. That could have been an option.
So they're all staring at me with the spotlight on. I'm supposed to be serious. It's supposed to be for the Lord, right? And I feel like I'm in my underwear in front of everybody, and they're just staring at me. And I look at Kara, and I start giving her a face. I'm like, give me the line. And she's feeling that people are staring at her because they're seeing me, so she shuts down and doesn't help me. And so then and then the person with the spotlight is just there.
I remember her trying.
Yeah, it felt like I still to this day am mad at her.
It was dark. They turned all the lights off.
It's
How
30.
could you see her?
Oh, I could see her. She was in the front line. Front row. And then for 30 seconds, I felt like 30 seconds. And then they go to the next person. And I'm like, okay, it's off me. And then they go back and they give me the next one. And I forgot every single line all the way through to the point where I was just going, you need to go to the next person. And I had to stand there. And then I came off stage and was going to be heckled for all of eternity with all of my friends. So that was
Who has genuinely heckled you? Not really. Just yourself.
Yeah. Well, that's my own worst.
Okay.
But I'm like, that was.
Let me do my due diligence. Luke, it wasn't that bad.
It was horrible. I still to this day.
okay.
I still to this day, they're like,
You can just move on.
they don't ask me to be in Christmas plays. They don't ask me to do anything. And praise the Lord that they don't, because I don't want to do them. I'm way better at coming up with stuff that's genuinely from the script of Luke rather than somebody else writing it. So that was mine, and I hope it never happens again.
You still haven't recovered.
And I still
Bless
haven't
your heart.
recovered. It's horrible. But what is yours? Because I bet it's like some small thing that's not even bad.
Well, it's less embarrassing now because I think I was like 6 or 7 when it happened.
No, that doesn't even count. No one.
But I've like always carried it with me.
I was full grown.
Again, I think any embarrassing things that have happened when I'm full grown, I've just repressed and been like, nope, moving on.
Yeah.
But I was a flower girl in my aunt and uncle's wedding, and it was me and my sister who were flower girls. And I can remember clear as day being in the like bridal getting ready room at the church, waiting to go down the aisle and hearing my mother say, do you need to go to the restroom? And I said no. And I was wearing this beautiful burgundy, fluffy satin dress.
Wait, were you 6 or 7 though?
I don't know. I almost called my mom.
I feel like 7's the threshold where you're a kid at that, like you're old enough to wear.
I felt old enough to know better. In the moment I did. But I also felt like my sister was kind of young too, and she's older than me. So I don't know. I'm 6 to 7 is as accurate as I can get. And then I was wearing these white stockings.
Well, they started off white, it sounds like.
Spoiler. So we walked down the aisle. We did the processional. I was standing up there. The ceremony felt incredibly long, but now who knows? Was that just my relevance as like a kid and being like more than 2 minutes was going to feel really long? And I start doing this like back and forth shifting on my legs of like, why am I dancing up there? I even remember like panic looking at my mother who said,
do they make flower girls stand up there? Usually it's like you just go down the aisle and get out of the way.
This was the late 90s or early 2000s. Okay, flower girls had to do their job at that point in time.
I thought I was just walked down.
They've given them the easy way out now. But again, 6 or 7.
Well, they probably changed that after they heard about your experience.
That's true. I changed the whole standard. I broke the mold. I remember panic looking at my mom and maybe even trying to mouth, I have to go to the bathroom. and yeah, bless her heart, nothing happened. So I remember peeing my pants.
That's it.
On stage.
On stage? And did everybody notice? Could you hide it a little bit?
I don't think it was like a toilet filler. But yeah, I had to then go again once we exited.
Hope I had a backup dress.
No, but I remember my mom just being like, we'll just take off your stockings and then you're good.
If that's the worst thing, then you have had, I don't want to like use this word you had a pretty privileged life of non-embarrassment. I'm like, back when I was 5 and one day, where it's socially acceptable to do this, I did this to myself.
I actually had this conversation with someone last night. So we were talking about this sweet, young, dramatic kid that we knew. Just like watching their behaviors being very self-focused. I mean, every kid, really. But I had this revelation. We were talking about this kid, and I was like, you know what? Talking to my friend, I don't think my siblings ever let me be too full of myself.
You can't. That's the way you get around embarrassment, I think, is to not take yourself too seriously. That's what made it so much worse, is that it was supposed to be a solemn occasion.
Even if I wanted to take myself seriously, my siblings were there left and right, and we were all close in age, to just mock me and ridicule me. And man, what a beautiful refining fire.
Yeah, that's what it's very important to be humbled early on.
Yeah, so I think like some of the ways that they mocked me, like could I have had an embarrassing moment to exceed that?
Yeah.
I don't know. They set the bar really high.
Well, there you go. That's the embarrassing moments. And hope it piqued your interest.
Yeah, there you go. There you go. Thanks for tuning in today. If you want to weigh in on any of today's topics, find us on social media at Johnson Lending Team MN. That's team with 3 M's.
Or if you're ready to make a move, you can visit my website to fill out a mortgage application at www.movement.com/lucas.johnson.
If you've enjoyed or endured listening to us today, please leave us a review on whatever platform you use to stream.
For what it's worth, that was our 2 cents and nonsense.